So, Chris, this is it feels like the media company to watch right now in our time. Stock is bouncing around. It's rallied. It's right now down about 0.2% in the aftermarket. What do we know so far?
Yeah, I think this is the definition of mixed results. You see, the quarterly revenue was a disappointment compared to what Wall Street wanted, but their fourth quarter guidance looks high. But then again, their 2026 revenue for the annual revenue looks just about in line. So there's a whole kinds of lot of mixed signals here. I mean, some takeaways, clearly they're upping their cost cutting, as you mentioned, which is an interesting time because, as everyone has reported, they're interested in buying Warner Brothers, and one of the concerns is, how many more jobs the industry would lose if they bought it. Some other numbers in there: $1.2 billion reduction in debt. It's still over $13 billion. This is all the money that the Ellisons put in to acquire Paramount, and not a huge reduction in the company's overall debt. So that's something investors, I think, have to think about. And then the other really startling thing is just that you see the dramatic, and we saw this with Warner Brothers as well, decline in the traditional TV business. Revenues are down about 12%.
Wow.
Big losses in advertising. And then the streaming business, of course, which is the future, is up 17%. So stronger ads and subscriptions.
Price hikes, too, coming to that business in the near future. That means it's going to cost more to watch the second season of Landman, I guess?
Could be worth it. Great show.
It's a great show. It is a great show. But there's also a lot of drama between, the creator of the show and his future at Paramount, no?
Sure. Well, yeah, he's not making new shows, essentially. He's moving over to Universal.
Yeah, this is Taylor Sheridan we're talking about.
Yeah, exactly. And a whole lot of moves, in Ellison land about, new content. Obviously, UFC. He's got the Duffer Brothers, signed them. He's lost some people as well. South Park was added. So there's a lot of money being spent, and in a way, sort of a shift in the content. Sort of, some people have argued, really got even more male-oriented for the Paramount Plus streaming service. But then there have been some, other moves, so a whole lot. He said he was going to invest more in content. That certainly seems to be the case.
Got to say, as more headlines are crossing the Bloomberg terminal, we've seen the stock. It's now up. It just keeps going higher and higher. What am I missing? Stock's up 7.3% now in the aftermarket. So talk about a bounce back. Let's just go through the numbers once again as we talk to our Chris Palmeri. Paramount third quarter revenue, $6.71 billion. The estimate on the street was $6.87 billion. Sees 2026 revenue of $30 billion. Sees at least $3 billion in efficiencies. Had seen $2 billion. It is working to reduce its workforce by an additional 1,600 employees as that integration continues. So again, third quarter adjusted EPS from continuing operations, 12 cents a share. I mean, what's the thing that is maybe pushing this so much higher here, Chris? Again, stock up about more than 6% here in the aftermarket.
I think probably it's the aggressiveness of the cost cutting and the strength in the streaming business. At this point, I think everyone expects the traditional TV business to decline. So those numbers, though they are shocking, are probably expected.
Yeah, I mean, this is
what?
I'm curious about the potential acquisition of Warner Brothers Discovery, because this is what really everybody wants to know about. This Warner Brothers Discovery right now is a $57 billion market cap company. Paramount Skydance is a $16.7 billion market cap.
There's some debt going to have to.
That's what I'm wondering, Chris. Like the financing of this deal, we know that the Ellisons have deep pockets, and no question they could do this without even raising money. But what would financing look like here?
We haven't been able to nail down exactly what's that. I mean, from what we gather, Larry Ellison has been saying, don't worry, I've got the money, whether I ultimately borrow some of it. There have been discussions, say, with Apollo.
He does?
Well, he's taken a lot of margin loans. He's done that historically for a long time and may continue to do that. Whether they ultimately put some more debt on a combined Paramount Warner Brothers, I mentioned the decline in traditional TV. Warner Brothers is even worse this past quarter, like 22%, if I recall correctly, decline in revenue. That was due to ratings almost alone, because it wasn't even the quarter that they didn't have the NBA anymore. So you can presume it's going to be even worse going forward. So he's literally the only bidder who wants to acquire the streaming studios and the traditional TV channels of Warner Brothers. Everyone else that we know of, Netflix, Comcast, are looking at more just the growing pieces of that company. So it's an interesting strategy for sure.
Hey, Chris, before we go, just real quickly, about 45 seconds. I mean, is this the media company to watch right now? And is it the media company to watch just because of what it's doing? It's different. It's a different person into the media business. And it's also the one that is connected to the White House.
Yes, because of all those reasons. Young, energetic, tech-savvy guy trying to find the future of the media business for sure. I wouldn't discount Warner Brothers as the one to watch just because between now and Christmas, we'll probably know that company's future.